Hello, everyone, and thank you to Thomas Tsao, the founder, partner, and chairman at Gobi Partners. I won't jump into a long introduction because the first few questions will really help you understand how important the VC is in Southeast Asia and also what they're doing in the region. Okay, so Thomas, thank you for joining us. I think let's do a little bit of history. I believe that you founded Gobi Partners in 2002 in China, and then
That's correct.
Good. So did you invest in Southeast Asia from that beginning, or did that come later?
Oh no, when we first started, and it's funny when I look back now, when we first started in China, that was 2002. It was actually very tough, and we were only focusing on homegrown innovation from China. Our larger thesis was that China, it's hard to imagine now, Stephen, but China back then in '02 was an emerging market. It was
Mm.
underserved, and there was a capital shortage. So when we were investing in China then, our first goal was just to survive, because if you remember when we started the firm in 2002, what happened in 2003? SARS. So
Oh, yeah.
it kind of what we're going through now kind of reminds me a little. I mean, this is on a much larger scale,
Mhm.
but again, we've faced those difficulties before, and again, the SARS epidemic was a very challenging period, just like the period we're in today. But Stephen, to your question, when we first started off, Gobi, we started off in Shanghai, and we were very much focused on China. We were in one office in Civic Square, and I remember during that time period with SARS, we actually, like today, we were wearing the face masks, and I wish I had the photo. We took a photo back then. Four of us stood side by side. I had the letter G written on my face mask, and we spelled out GOBI. And I'm sure right now, customized face masks are probably going to be a really big opportunity. And I remember back then, in order to maintain what they call now social distancing, we actually brought a toaster to the office so we could make our own sandwiches, so we didn't have to go outside and get
Mhm.
takeout or even eat at the restaurant.
Yeah, no delivery apps back then. Yeah.
No, not yet. No.
Okay. Okay. You were very early into Southeast Asia. When was that exactly?
It's interesting. So we made our first move to Southeast Asia. This was we decided 2010,
Oh,
and I remember back then when we made the decision, there was also another. It was the H1N1, the swine flu, was
hmm.
going around. So I think when Gobi and pandemics, I think we sort of have a bad history. But when we went into Singapore, we expanded. That was 2010. And that was our first international office, and that was our first foray into Southeast Asia.
Okay, so in 2010, was there a tipping point or a factor that pushed you in?
Yeah, I think for us, a lot of the data from our portfolio companies, uh, the data was telling us that there were growing linkages between China and Southeast Asia. I'll give you an example. One of our companies we invested into, and this was right kind of in that '08, '09 period, was one of the largest travel companies for tour guides, a company called Tuniu. And
Okay.
so working with Tuniu, we started realizing that so many of their users were vacationing in Southeast Asia. Uh, and I remember the numbers were as high as 35% of Chinese tourists were going into Southeast Asia. And if you remember, same thing, we were coming out of that great recession in that '08, '09 period. And a lot of people thought travel wasn't going to recover. But again, the Chinese middle class was looking to travel around the world. When we looked at the data, the first place that Chinese tourists back then went to was Hong Kong.
Okay.
And then their second trip, for many of these, middle-class families, it was their first international trip abroad. First trip was usually Hong Kong. Second trip then was to Taiwan. After they got confidence, then they started wanting to adventure further abroad. And Southeast Asia was a very natural destination for Chinese customers to go to, travelers. And so we saw that data. We had a really big app called Camera 360, and we saw that so many of their users, hundreds of millions, were actually in Southeast Asia. And we said, wow, what type of marketing are you doing in Southeast Asia, Stephen? And I remember the CEO, he said, we haven't done anything in Southeast Asia. We don't know why people are using our app. And that's when a light bulb went off, and we said, you know what? We should spend a lot more time trying to figure out, what's going on between the ecosystems of China and Southeast Asia.
Okay, so it was like the combination of the economic power and the mobile smartphone usage.
Yeah,
okay.
No, I think that's absolutely right. Yeah.
Okay. Then, do you recall your first Southeast Asia investment?
Oh, I don't know if I remember the exact first one, but I remember a couple of the early ones we did.
Okay.
So when we opened up our office in Singapore in 2010, we were working with the Media Development Authority of Singapore. So we set up a small pilot fund. And I remember back then, all the VCs in Singapore were actually rushing to China. Nobody wanted to really focus on Southeast Asia. Meanwhile, that's why I think MDA, they thought we were very contrarian. All the Singapore VCs were trying to go to China. Here was this Chinese, originated from China, a firm that had been investing into China, wanting to come to Southeast Asia. And it's because we had some, early indicators that we thought Southeast Asia was going to take off. And from that fund, again, it was a small pilot fund. There was a heavy emphasis on investing in a Singapore nexus, related to Singapore. And one of the companies we got fortunate to invest into was a company called Mindspring. And again, the founder was a Malaysian Chinese. He'd been in China for a long time. He had studied the market and said, you know what? Indonesia really reminds me of where China was, 5-10 years ago. So then he took his whole family, moved from Beijing, and went to Jakarta. And then he started off in, localizing online games for the Indonesian market and translating it into Bahasa. And then he saw a bigger opportunity. He said, Tom, there's this company in China called ByteDance. They got this great news app called Toutiao. I think, we could really create a local language version of Toutiao for Indonesia. So why don't we try to create the Indonesian version of Toutiao? And we said, that sounds like a great idea. And that's what they did. So again, that's an example of one where, before China was copying from Silicon Valley, and that was an early, you started to see the beginning of that trend where Southeast Asian companies were getting their inspiration from China. And so you could see that evolution from what they call C to C, copy to China, to copy from China. Right. And I think Mindspring was a great example. And their app right now, it's an app called Baca Berita. I believe it's one of the most popular news apps in Indonesia. And
good. Well, then that's good news because ByteDance itself is taking the region quite seriously with its several different apps for media and, of course, TikTok as well.
Of course. Yes.
Okay. Okay. So yeah, it's good to hear they're still going strong. Okay, so I believe that you've opened like 11 funds. So how many of them are active right now, and how many are dedicated to Southeast Asia?
Well, we actually now have 13 funds, Stephen. And so for Southeast Asia, we started off with regional funds. Gobi, we think of ourselves as a full stack venture capital firm, which means we'll invest from the seed stage, A round, and the growth stage. So for Gobi, we have 3 regional funds. The Super Seed Fund, which is an ASEAN regional fund focused on seed to pre-Series A. We have then an A-round fund, again, that invests across the region. And then we have what we call the Meranti Growth Fund, which again invests all across ASEAN in the B and C stages. In addition, we also have 4 single country initiatives. We have Gobi Agong, which is a single country seed fund focused on Indonesia. We have Gobi Core, which is a seed fund focused on the Philippines. And this should be exciting news for you, Stephen. We're about to launch a Malaysian super seed fund just focused on Malaysia. And we also now are working very closely with Grab to work together with their accelerator in Vietnam. So those are all single country dedicated funds, which then support kind of the regional 3 funds that I mentioned. So I guess all in all, we have 7 funds focused on Southeast Asia right now.
Okay, 7. Okay. Okay, that's good news. Have you announced the Malaysia one, or is that coming quite soon?
That's coming very soon, and I'd be happy to share more when we publicly announce that. But your listeners are getting the first preview. That's coming very soon, by the way.
Okay, good news. Yeah, okay. It's good to hear that things are still happening with what's going on. Okay. So, okay, moving on. So basically, Southeast Asia now is, very developed in terms of tech, and we have lots of e-commerce marketplaces and social apps. So does that mean that you're now more focused on things like enterprise startups or fintech startups, or how are you changing?
Well, look, I think there still continues to be great opportunities around e-commerce and in these marketplaces. But without a doubt, Stephen, the pandemic is only accelerating a lot of the shifts that were already happening in Southeast Asia. Okay, so I think very few investors are looking to invest into horizontal, B2C e-commerce marketplaces right now, right? Certainly Indonesia, kind of the game is already kind of won, right? With Lazada, Tokopedia. But having said that, there are still a lot of opportunities around kind of the e-commerce enablement. And where are some of those gaps? For sure in the logistics space, right? The enablers, right? Who can bring brands over, help the social sellers. And so in that area, we've invested in a couple of companies focused on logistics, right? Like a company like Delivery or Easy Parcel, right? Who are all working on kind of the e-commerce enablement. So you see that. Fintech is now a huge area. I think everybody knows that. And we've made many investments in that space. A few of them are doing quite well. We're an investor in Super Atom, a company called Julo. And we're also a big investor in a company that's in the automotive space, Carsum, but they are slowly now also becoming kind of a hybrid automotive auction platform, but they're also fintech because they're offering now financing for the buyers and the auto dealers. And recently we just invested into a company in Thailand called Phenomena, right? Which is all about robo-advisory, helping, it's a digital wealth management platform in Thailand. And so these are the new types of opportunities. So financial inclusion, helping the average customer get more access to different types of financial products. So fintech's another area.
Okay.
But then finally, Stephen, your point on the enterprise, definitely happening. And in fact, I'd like to point out 3 of our companies that are focusing on that. We're an investor in a company called Aerodyne. They are a B2B drones as a service provider.
Okay, so they're not making the hardware, they're doing something different.
Well, they don't make their own hardware. They operate the drones to help big enterprises like Petronas, like agricultural companies who need to use drones to collect data to inspect all their assets. Companies like Telecom Malaysia who need to inspect their base stations. So they provide drones as a service. In fact, they just acquired a company in the Middle East. So they've been very active. The most important part of their business is not just operating the drones, but gathering all the data, providing the analytics on what the images are telling you, right? So again, that's something very interesting, homegrown innovation coming out of Southeast Asia. Another company we're invested into is a company called Eureka, which is a big data telco company. And right now, they're engaged on the front lines of the fight against COVID-19 because they're using a lot of your telecom data, your GPS data, working with the governments to make sure there are no large social gatherings, right, with all these movement restriction orders, right? So Eureka is playing a real frontline effort there. And then we've got companies, AI companies, image recognition, one, Stephen, based in Singapore called vSense, right, which is using your phone, scanning images. And again, I think that's only, that adoption of using the phone to interact with products is only going to accelerate because nobody wants to touch things right now because of concerns that there could be virus transmission, even on pieces of apparel that are hanging in the stores. So, yeah, for sure. I think the Southeast Asian venture market and what investors are looking to is evolving.
Okay. You mentioned before that the pandemic is accelerating shifts. So does that mean mostly fintech or some other things as well?
Oh, there's several. Just to give you several examples. First of all of our logistics companies, I think, have seen a tremendous pickup in orders. Right, we're an investor in a lot of the online education companies, and same thing. You have students now operating at home, and these Zoom calls, Stephen, are becoming a daily part of life. Right. Think about the long-term implications. My children right now, they're growing up thinking that learning, attending school through a video conference call is very normal.
Yeah.
And what are the long-term implications of that? I don't know, but I think, it's definitely going to be worthwhile to find out, right? And I'd love to give you a story here. One of our companies, again, it's not Southeast Asian, but again, they have a lot of viewers in Southeast Asia, is we're an investor in a company based in Hong Kong called Day Day Cook. The founder is Norma Chu. She's a well-known celebrity. She has her own cooking show, online cooking show. Okay. And because everybody is staying home, can't go anywhere, you can't go to restaurants, families are making their own meals at home. But like my wife, after the first week, we ran out of recipes. We couldn't be eating tuna fish all day. And her show, wow, the viewership has gone up 300%. The amount of new accounts. So, despite all the dreary news we're hearing and the grim headlines, there are pockets of activity where you're seeing kind of the shift in behavior, and certain companies are for sure benefiting from that.
Okay. Okay. So we know you are very busy in the region, but would you say that it's getting tougher and tougher to be an investor in the region with so many funds active, plus there are Chinese companies coming in, as competitors and as investors as well? How tough is it recently?
Well, I guess it's both good and bad, right? In the early days, certainly there were a lot less funds operating because, again, I don't think a lot of people believed in the prospects of the region. So while it was easier to find deals and you certainly knew everybody on a first name basis, the depth of the market for follow-on funding, the ecosystem wasn't as strong as it is now. And so by definition, when the ecosystem gets stronger, that means more people are paying attention, you've got more capital. Of course, that means there'll be more competition as well. But I think, again, as an early mover in the region, Gobi, we've benefited because I think we've built out a brand. I think we've put together a corporate culture that a lot of people identify with and believe in. And we've built out now a portfolio of over 60 companies. So I think having more investors come in, we welcome that, because I think it adds to the overall robustness and the strength of the ecosystem. I see these big corporates coming in. I welcome that. I think it leads to more exit opportunities. And I think the more strategics that are looking at this region, the better it is. And I think every strategic should be looking at Southeast Asia, just given how favorable the tech trends and the demographics are.
Mm-hmm. Okay. So that means more exit opportunities for startups and maybe also for you as a VC.
Oh, yeah. I would say, though, Stephen, you're absolutely right. I think for people trying to do their first time fund, again, if you don't have a real differentiating factor, that gets tougher now. Because a lot of, the Southeast Asian story now, I think, is much better understood than where it was back in 2010. So your value proposition has to be a lot more clearer.
Okay. All right. So maybe you could dish the dirt on what do you think is the worst thing happening in the region's tech sector right now? For example, is there too much burning money for subsidies or something like that?
Yeah, I think in the last few years, because of the increased interest in Southeast Asia, there was a lot of money that perhaps came in a bit too quickly. And so the danger there is, and it's what we saw in China and what we saw in India, and what we see in Silicon Valley all the time. The big issue is that of bad actors, right? Yeah. And I think, in the beginning, I was struck by how, I felt how ethical a lot of the entrepreneurs were in Southeast Asia. And to a certain extent, I still believe that. I think Gobi, we've been fairly fortunate. But again, I've warned the ecosystem for a long time that when you have an influx of money, there are going to be those folks, what we call the bad actors, who are going to do some bad things to the whole ecosystem. And again, a number of those cases have been reported recently.
For example, what's one good example?
Well, yeah, obviously what's going on with Luckin Coffee. That's one.
Okay. Luckin Coffee in China, yeah.
We've seen that. And again, people thought that was isolated to China, right? It was like, oh, it's because, and I said, absolutely not. There are bad actors everywhere in every region. Again, I'm not personally involved with this case, but again, I've been reading the media, like I'm sure yourself, the whole Honest Bee situation. So again,
yeah, in Singapore, yeah.
In Singapore. So I think there are more of those cases lurking in Southeast Asia, because when you have, for a lot of the entrepreneurs, they're very young. All of a sudden, they're getting large sums of capital. If you don't have the right type of governance or experienced investors, and now you've got COVID-19, I mean, it's the perfect storm for disaster. And I think, Stephen, you're going to be seeing more of those cases emerge.
Okay. Okay, well, that's bad news. But okay, let's talk about the virus a little bit more anyway. I guess we can't avoid it, actually.
Yeah.
So what are your portfolio CEOs telling you, what are their main concerns at the moment?
Well, look, the first thing we're telling our CEOs is you've got to survive. Okay. Right? This is going to be a very difficult period. Again, drawing on our experience from, post 9/11, SARS, the Great Recession, nothing can prepare you for the scale of this current crisis. At Gobi, we're calling this an extinction level event for a lot of startups. So the first thing we've been doing the last couple of weeks has been, I've been on the phone almost every day with all of our portfolio companies to assess the situation, right? So it's like what the governments are doing now. You've got to get the testing. The first thing is, how much runway do you have? So Stephen, I can just share this. This is hot off the presses. I mean, we've done an internal assessment of our 260 companies right now. We've got 76% of our companies, they have runway of more than 6 months. Okay. So when we look at the overall portfolio, we feel like, okay, at least they've got breathing room, you know, to hope to at least survive, because, you know, new capital coming into the industry right now is going to be very rare, right? And you can't count on that. So now what we're focusing on are the companies with a runway of less than 6 months. What do we do? And there's going to be a lot of tough decisions to be made, because as much as you want to help every company, there's going to be some hard choices. And the VCs in this case are sometimes going to be like the doctors. You have to decide who's going to get the ventilator. And by that, I mean, who's going to get the limited amount of reserved capital that you kept. I mean, VCs, we always talk about your reserving capital, your reserve policy. And we always say, yeah, we've thought through it, but nothing can prepare you for this type of an event when every company in your portfolio is coming at the same time saying, hey, I need more capital to survive. So there's going to be some really, really tough decisions ahead.
Okay. Are you thinking in terms of the lockdown, which might only be, you know, another 1 or 2 months, or are you thinking that there's going to be a knock-on recession?
Well, I think it's a combination of those factors, right, okay. Stephen? I think, for example, our travel companies. One of our companies just had a record quarter, was a company called Holiday Me. And a lot of their business is based off of digitizing and offering online visas for travel packages for Umrah to the kingdom, right, to Mecca.
Oh, yeah.
They were doing phenomenally well. But here's the problem, Stephen. You know, the kingdom has shut down. No travelers are allowed to go perform Umrah. In fact, you know, we're waiting with bated breath. Are they going to cancel the Hajj? Right? These are all, and so nobody has any clarity or visibility as to when this is going to reopen. Now, the good news is I would categorize Umrah as essential travel rather than kind of, you know, leisure travel, which I think will be a bit slower to pick up. But you know, nobody really knows, you know, when that's going to reopen and when that will go back to normal. So that's an example of a company that right now we're working with them, trying to stretch that runway. The company's really making some tough decisions. Management has been incredible. But again, I think any company in the travel industry right now is undergoing the same. We have other companies as well. They're in the leisure travel space, and they've just seen their revenues drop off the cliff.
Yeah. Nearly a wipeout, I imagine. Yeah. Okay. So next, do you think that you and other VCs will have to do some Softbank style bailouts of small startups or huge startups, or what do you reckon?
Well, you know, Steve, I can't say we'll be doing any type of Softbank style, because, you know, we're only a fraction of their size, so, you know, we're not doing anything like that. But are we going to be making tough decisions to see, you know, who we can help make it through the period, and which ones we unfortunately may have to let go? Yes, I mean, that's definitely going to happen. And as of now, tough decisions are being made, but we want to give the management teams all the support we can, because ultimately the limited amount of capital the entire industry has, right? You have to decide where to allocate it. You're going to allocate it to the companies that are going to be able to survive this difficult period.
Okay. Yeah, when I said Softbank style, I guess I meant you'd end up having to acquire, like, you know, 80% of the company just to keep it going, that kind of thing.
Yeah. I mean, I think, look, will we be working with other investors to try to help give companies more runway? Yes. I don't foresee a situation where Gobi's coming in to take control of a company. I think there's other types of investors. I think if you're a distressed investor right now, you're probably thinking, hey, this is a great time to be investing. But I think for everybody else, it's a really difficult time.
Okay. Are you still actually doing deals with startups at the moment, you know, remotely?
Oh, yes, we are. I mean, I think, Stephen, you may have seen, one of our companies, again, in Hong Kong, Airwallex, the fintech company, they just announced a 160 million raise. So again, under these circumstances, what a testament to that management team. The behind-the-scenes stories of the challenges they went through to close that round just goes to show you, it is a glimmer of hope that the really good companies are still going to get funding. We actually just participated in a round in the Philippines in a live streaming company called Kumu. So that was just announced a few days ago. And Stephen, stay tuned. We're actually about to announce another deal very soon.
Okay.
So yes, we are still making new investments. But a lot of these investments, we have been talking to them and in discussions with them all pre-COVID. So if your question is, have we engaged in any new investment decisions since the pandemic? I can tell you the answer is no.
Yeah, sadly, yeah. I guess the first time investment is so much more personal, or what's the thinking?
Yeah, no, it is a challenge. As great as these conference calls are, they are no substitute to really develop a relationship with the entrepreneur. And so, as we say in the business, timing is everything. For those companies that were able to close their rounds pre-COVID, those companies are in a great position. And for those companies, if you missed that timing, it's sort of like the dot-com bubble in 2001, Stephen, if you remember. Companies that were able to go public right before, so many companies were on the cusp. And I could tell you the sad stories. Maybe one day, we had so many companies that were so close, raising very, very large rounds. But then again, the virus hit, and then the funding, the investors were just like, hey, my stock price just dropped 60%. Management's asked us to really cut back on all non-essential business activities. We've got to put this investment on hold.
Okay, that makes sense. Okay, so let's look forward a little bit for the final question. Where do you think in Southeast Asia is maybe undervalued and overlooked at the moment?
Well, I think for one, I think Malaysia has tremendous potential, and it's always overlooked.
Did you mention that you are based in Kuala Lumpur? I can't remember.
I am based in Kuala Lumpur. Yes. And that's one of the reasons why we're about to launch the seed fund dedicated just for Malaysia. Malaysia's kind of overlooked because it's kind of stuck between Singapore and Indonesia, right? But as a result, that presents so many opportunities for us, because we have a big operation here in Kuala Lumpur, and we just see so many great startups and very few VCs paying attention to them. So I think that's one market we really like. Vietnam, and I think most of your listeners already know that. We believe in Vietnam as well, which is why we just partnered with Grab on this accelerator program that they're operating in Vietnam. And then the other market that I think is starting to gain a lot of momentum that's also been overlooked is the Philippines. As you know, we're one of the few VCs that's got an operation in Manila. We have a Gobi Core Fund, the Gobi Core Philippine Fund. We've already made a number of investments. We just announced our most recent investment, Kumu, and we're doing more. And so we're going to announce a few more investments in the next couple of weeks. So, Stephen, I'll make sure you scoop that up.
Okay. All right. Well, that's good news. And maybe on that hopeful note, that's a good time to end, I guess. So, Thomas at Gobi Partners, thank you very much for joining us and telling us so much.
All right. Yeah, no, Stephen, thank you for having me.
Okay, my pleasure.
Okay.